All right, FOMC day. So we have a slight gap down at the open with bar one. Decent close but it is a kind of a doji. But it did close on its low. But problem here is that it's not all that great of a bear bar. I'm sure there will be, because the bar body is good, the 50% probably sellers waiting. So we might get a pullback. So I would look for a next bar. Some bears will try to sell below that bar one, and others will look for a pullback because it's a doji, so it could be a trading range bar. There are two types of bars, right? There's a trend bar, there's a trading range bar. If this is a trading range type bar, then you always want to look for some kind of a pullback and sell with that. So starting with the 50% of bar one, and the high is you would have a bunch of orders, right? So how do you expect follow through? Is bar two is it started it started slightly above the close of bar one. I don't like that. It should have started to sell very quickly at the open of bar two. So bar two is looking to close bullish, but there are sellers at the midpoint of bar one. So they gather those sellers. Now it opened here first. It came down and tested this bear bar's low and then went up. So now more bears are entering here. That's it right there, and we get a second leg down. So you have a leg one. Your leg pullback is you have a leg two. Strong bar closed on its low, but it's got a lower wick. Market probably wants to test its low with bar four. Problem here is that it starts to open again is just like bar two above the close of three. Okay, so now it's looking to go up and see if there are any sellers here. Now it tried to come down first, but it did not trade below the close of three. If a bar like four is not trading below the close of three, that means we're gonna expect bullishness, right? And there it is. It's a weak bullish bar closed, but immediately bulls started. So they closed the bull bar above four, and therefore you have buyers there. But the bars are overlapping greatly. It's 2, 3, 4, and 5 overlapping. So it's a limit order market. Instead of buying one tick above, buy the pullback. Maybe if it's a strong bar like 1, sellers were at the midpoint. Then the strong bar like 5, buyers are at the midpoint. So now the bulls are buying with limit orders and entering. They did not close a strong bull bar, but they closed a one tick body right at the close of bar 5. Now is this a continuation? Is this confusing? Oh yeah, it's confusing, all right. But it did close the bar. Is at the very minimum the bulls can do. They did not allow that bar to close bearish, because if bar 6 were to close bearish, then we had to sell. Okay, so what do we got here? We have a doji, is 2 bull bars and a doji, but it closed right at, I believe it's right at the close of 5, yes. So now we have an inverse head and shoulders, left inverse shoulder, head, and a right inverse shoulder. So what I generally do is that I mark this area, right? I mark the 2 low. That's the inverse. That is the inverse left shoulder, right? I expect bears to close below it to get follow through. But now I'm getting bulls, right? I have another bull bar, this time opened and traded above the last 2 prior bars. One of them is a doji, the other one is a bull. Is above their close, so that means we're bullish. We're going to test the prior bar side. So we're going up, we're testing. Is one thing that the bulls fail to do is to close the body above the prior bar side. But they closed it above this bull bar. So it's still semi-bullish. I would expect follow through. So we're going to go and test probably market is trying to get to these close of yesterday, because close of yesterday was bullish. So we have to give bulls a chance to try to go there and test that area. Market did go there. It opened here, tried to go there, but can't seem to get above it. So we're never going to be able to get up here. So we have a higher chance of maybe coming down to the lows. I don't know. is right now I'm seeing a double top at the moving average, right? Bar 1, bar 2, and a strong bear close. Closed below the close of open of 8 and low of 8. So I'm expecting is sellers again. I'm probably going to put a sell order there. I'm going to probably put a sell order here because it's a strong body. Not all that strong, but still is, and when the price gets there, I'm going to sell. What I'm looking for is market to come down to the inverse left shoulder and start closing bear bars to eliminate this inverse head and shoulders, and instead sell towards down below and maybe get a measured move. So market started to come down, and I don't have that close until bar 15. Is bar 15 succeeds, so we're selling. But every bear bar that we close on its low, we're getting two counter trend bars, right? But so how do I trade these bars? I would probably sell above them, right? I would probably sell is above those bars. Problem here that these are bull bars, so it makes it a little difficult. But they are selling. Look, they sold there, they sold theirs. Most likely, they're gonna, maybe not this one, but they're gonna try to sell at the highs, right? Because now they're taking out this low, so I would look for continuation down. So all of these are bear flags, basically. So market is coming down, and is I have right here is a micro double bottom, and the bulls failed there once again. So I'm going to look for a measure move target to downside. So market is now going sideways because it's FOMC. Is it came down, it went up, and then it came down again. Is we have a trading range. So think of this as your trading range for now, right? So you have a trading range. So look what happened there. We tested these 50%, and then we could not close above bull bars. So do you think we're going to go up here anytime soon? Probably not. So market is going to probably come down. Now what you can do, if bars have a lot of wicks above and below, you can also exclude those wicks and only take the bodies. Then you look for a pullback, right? And then you look for a breakout. Once you see that breakout, you're going to see sideways and down price action most likely. But where is it going? Well, you need a 1 hour and 2 hour target. We got half hour. So how do we get to the 1 hour? How do we get to this measure move target of this trading range breakout? Well, we need to close bear bars below that. Have we closed any? We tried once, failed. We try to sell again and failed. Now we're closing bull bars above the threshold, the green line. So that means we're going to go right back to the 50% of this trading range once again. Now we go there because bears got trapped at the half hour and couldn't get down to here. They're looking to sell once again. They're looking to sell around the moving average. They're looking for a wedge top, 1, 2, 3, right? They had 1, 2, 3 wedge bottom, higher low. They try to get some kind of a major trend reversal around 11:30 at the end of the second hour, but they failed. These the breakouts half hour bears are disappointed, so they're looking to sell again. They try to sell here, failed. They're selling now. So this is probably trying to come down to the 1 hour. And that's 1 hour and that's 2 hours. So you can see is that trading range gave you a 2 hour before reversing with FOMC. Well, that's not FOMC. When did FOMC was 2 o'clock, so that happened here. But anyway, that was price action. So we got the 2 hour. And then you no longer need this. But did we actually get these measured move? Measured move was from here. Yes, we got the measured move. And then I actually measured. I said, what if we actually come down further? Like maybe, let's see. I measured it from the 3 low, but we never reached there, right? But what if I were to measure where the breakout happened? Maybe right there, right here. Yeah, is just a body. Yeah, we would have made it. But to me, this is very arbitrary. So it's basically, it's just not going to do all that great. Okay, so I wouldn't measure this. Eventually I removed it. So the measured move was really is from here to today's high is and then down. That's pretty much it. But if you actually utilize the trading range, then is you did better. But what if you get the trading range is from high to low? So that was the trading range, right? Is high, low. So we go back to these 50% and then move down. That's your measured move. So either or, you're gonna get some kind of a target, and then we just reverse right back up. So now we have a strong bear bar, right? But it's coming. This was also head and shoulders pattern. So I told everybody, I told you guys that this is a neckline right here, and we broke the neckline, right? So there's one neckline right there, or is I believe this was the neckline. We broke the neckline, and there's one way to look at it is, or you can say, no, I'm not going to look at that as a neckline. This is a neckline. All right, we didn't break it here. We went up, and then we broke it. We went up again, and then we sold again. So is bears, things got a little bit dicey there. Is it went above the trend line, which is not supposed to do that. It only goes there and then sells. But this bar is too long, too big. When bar 44 is too big, we need to test the bar 43 high. Bar 43 high, bar 43 is an outside bar followed by an inside bar, right? And inside bar is pretty big. And it's got a very small upper wick, so probably buyers are above these bar 44. They want to test these bar 43 high, and they want to get a breakout from the 43 high, and they want to get a follow-through buying breakouts, okay? But look what happened there. So bar 48 failed to close a bull body above the outside down bar 43. So what does this mean? It means is you're not going to get a bullishness. You're going to get bears there. Bears are going to try to sell this, right? And they did right there. So they're looking for some kind of a bear flag and sell. This comes down nicely, it vacuums down, but then we get a rejection. Bulls are buying, you're in some kind of a trading range. That's also breakout test area, right? You have a double top there. That double top is a lot stronger, even though the 49 is a small body compared to 43 high. So it's not very good double top, but it is a double top. So that is your first low one from the moving average and then you get these low two. So you have a double top and a lower high. That is amazing. So you have a head and shoulders pattern there. So now you can look to sell. If you don't want to sell below 53, then look for a good bar separating from the moving average, such as 54, and sell the close or sell one tick under. Now you're getting a downwards move, and this is the FOMC right here. Problem with the FOMC is it's the location of where the bars are. It's not surprisingly big. We didn't get a major reaction, but it is kind of a leg one, leg two, or leg one, leg two. Leg two is divided into leg one, leg two, maybe leg three, or spike, pull back, and it's channeling down. So I told everybody this is still going to sell. Bar like 55 is probably going to get a follow through. Bears are trying to get a break below the 43. Bears actually got that break below 43 with 60, and they sold immediately underneath bar 60. But they got trapped because this is FOMC, and right around FOMC has two parts. Actually, it has three parts. Before the FOMC it's got two parts. 2 o'clock and 2:30. The press conference starts at 2:30. And that's when it started. They trapped the sellers underneath 60 because this is a bear flag trying to get a breakout at the bottom of a trading range. Not a great idea. It's a low probability. It's probably not going to break out. It's going to fail and it's going to reverse back. Plus it's FOMC, so everybody who sold 60 trapped. But you had a legit bar there telling you that it could sell and move down here. So those trap bears are now looking for a place to sell and get a break even. So what better place than the top of a trading range or that high, right? So they're going to wait for bulls, right? bulls to take over. Well, first they try to sell in the middle, maybe that breakout test area is, I don't know, bar opened here, came down here. I would not have sold this bar. This is not a good bar to sell. I would not sell above it. I would not sell the close. I would not do that. This right here is an attempt to break even for bears, but only machines can do that. You cannot do that. You and I are retail traders. You need a good signal bar to sell. So the bears are looking for a good signal bar. If that signal bar with a good body is the one is 66. Okay, so bar 66 is what you're going to do is you're going to measure from the 60 where you sold and the close of 60 and the close of 66, and you're going to hope that you can get an average break even is somewhere right here. And look at that, leg 1, leg 2, and bar 70 gave the bears a chance to exit right there. And that's it. So now bears are exiting, and that's why you end up getting these bar 71. So now bulls want a leg up. So they get their leg, but the problem here, I told everybody, this is still a trading range, is eventually market is trying to get to the bar 8, maybe make a new high. But the problem here is this trading range is you got bull gap, you got bear gap. Bulls are buying and closing the bear gap. So when you would not want to sell it. What this is a desperation of these bears selling at the highs, breaking even. So this is a scalp, not a swing down, okay? Because this leg now closed the gap, bear gap bodies in this leg. It probably is looking to trap more sellers and then go and make a new high. That's the second leg. So bulls got their second leg, okay? I told everybody that, if you guys remember, this is a scalp, and look left, find a gap bar, and then put a buy order there. Most likely we're going to go test that high. And we did that. So bulls tried one more time. Because the majority of the day is FOMC got a failed breakout for bears, and it went back and created a trading range. It's going to trade as a trading range rest of the day. And I said, although we have a bull flag, generally anyone buying here will take profit at the high or at the prior high and expect a failure breakout, because this is a trading range. 80% of breakouts fail and return to the 50% of the trading range. Plus, another sign was bar 70. Even though the bulls bought it and this was a scalp for bears and swing for bulls, your buy signal bar is absolutely terrible. 70 is not a good buy signal bar. So that right there, I warned everybody, this breakout is going to could be short-lived. There could be sellers above, and even though we got to follow through because it's a strong bar, but the breakout was terrible. We didn't get a breakout and a follow through. I expected bulls to show up maybe, but once you have an inside bar, two dojis side by side after the second leg up, or third leg, maybe a leg 1, leg 2, leg 3, technically this is a wedge top. You get two dojis at the top, that's the end of the trend. Somebody asked, how do I get better not entering late in the trends? Well, count the legs. Okay, don't scaling with the third legs, and if you start to see dojis side by side at the highs, maybe it's time for you to not sell anymore, not buy anymore, maybe look to sell. So now we have bar 70, bad signal, bar 74 comes down, crashing, right? What does this mean? Well, it's trying to reach the bar 70. It's a magnet now, right? But I told everybody, watch, there's still a gap here. If bar 74 cannot close this gap completely, then we will get a chance to go up because there are bulls stuck there. So bulls try to buy the bar 74 close, but you got a massive bear gap bar here. 50% of that bar, 33 to 50% pullback, sellers are waiting. Bar 75 is not a good bar. I went bar by bar, closing, I read everything, and I said bar 74 is not a good bar. I would probably not buy and expect buyers to go all the way. They lost their chance to break even at the average price, which was slightly above bar 75 high, or break even fully above 71. they just lost their chance. And bears want another leg down, if not two legs, right? So they're looking for a bear flag. So now I see that is bears trying to close the gap. Is technically is theoretically it closed, but technically it didn't. So what does that mean, theory and well, you want to see bear bars coming down and overlapping. First of all, taking out the open of this gap bull bar and closing a bear body. Is this one failed, that one failed, 76 failed, even 77 failed. Bulls are buying and trying to break even, buying, trying to break even, buying. By the time price, look, is if you actually measure, if you are stuck, maybe you bought that close of bar 71 and you bought the close is 74. Oh, maybe you did. No, I didn't measure it like that. I measured it because you buy one tick above. You never got that full break even. I mean, not full, but average break even. Needed to test there, and the bar 75 failed. So now this comes down, and there's no overlapping. Only wicks are overlapping. So that means they're buying underneath this bar. They keep pushing higher, pushing higher. Finally, they get it. Originally, this was their average, and they finally got it. But they're buying lower, right? They got it. They're buying lower, they got it. They're buying lower, they got it. But that's all they're getting. What about the bull bars? Can you buy above this bars? No, you cannot. These bars, right? Small bars, they're dojis. It's a barbed wire. So you have to, it's a tight trading range. You have to give it a room for these highs and lows of these wicks to be tested. That's one way to, but it's not, it's really pattern calling, but not necessarily how to enter a trade. How do you do that? Well, if the bar body closing bearish below the prior bar's bull close, I generally like to put a sell order one tick above that 76, wait for price to get there, sell and make money, take profit at these prior wicks. And that's exactly what the 77 did. Went above the 76, activated the sell orders, came down, closed there, but you already scalped. You have to have an exit order there. And same thing, now you can put a sell order above bar 77. Bar opens up here, goes there, activates you, comes down. Those are the wicks, right? And then close here. So you made money. And then I said, okay, we're going into the end of the day. I was just telling everybody I would not buy here. If I'm going to do anything, I'll have another sell order. I'm going to milk this until 1969. Okay? Well, that goes backwards. Until 2039. So you got my point. So I'm going to keep selling until I see a bull close. Then I'm done, right? Then I'm going to look to buy. And then next thing you know, this one comes down crashing. You are making money there. So that ended up becoming a bear flag. And when you want to see bear flags, is you don't want to see two bull bars, right? So that's a bull bar, but that's a strong bear close. So most likely is you can even sell the close of that bar and make money. And it came down before going back up. So you made money. You needed to take profits right there. Okay. So what does this mean? This means this FOMC ended up becoming a failed bear breakout, which was in the encyclopedia. And I showed a bunch of examples how this day can actually stay in a trading range. And it did. So it ended up becoming a trading range trading. We had this. We've been having these FOMCs. This is not the first. I think the last one we had was last FOMC or the one before. Oh yeah, the last FOMC last quarter. So that was definitely another trading range trading. So market is confused. I don't know. I don't know what that means. I love to ask Al Brooks what he thinks about that. Why the FOMC suddenly, bars are not breaking out? Is that mean that the economy or we're losing trust in Feds? I don't know. Or is this a good thing? That I'm not a fundamental trader, but this is the last two. I think it's been trading like this in trading range. So I like to find out more. But anyway, so it's a trading range trading pretty much, and a bear flags. Bears done a terrific job. Bulls tried, but they failed. I mean, we did pretty good here buying and taking some profits, but we could not close above the movie. open of the day, so we did not get any bullish to test the 8 high. But the one thing the bulls did, they actually did go and tested 8, but they could not overlap with body of bar 8. So it looks like we're not going to go up there. Okay. So tomorrow, I expected bears to reach here, but they failed. Tomorrow is the third part of the FOMC, and I'm just going to trade it as a trading range day for tomorrow. I have more support here that we might need to come down. I have the high here, I have the low here. So if we open up around here, I'm going to expect price to go there and then fail and then come back to the close of today and then I'm going to see if we can actually take out the bar one's low in the process, and I'm going to try to sell into it here. If it's other way around, if the market opens up bearish, then I'm going to expect this area to be tested. I'm going to look for a wedge bottom, and I'm going to look for a reversal back up to these levels, maybe there, because there is an expanding triangle with an apex. So I'm going to look for a reversal pattern, go into the apex, closing bull bars, and reaching up here. And if we become very bullish, then I'm going to look for bull bars closing above this trend line, and I'm going to look for more bullishness. So we might get a high to buy signal at the end of the first hour, or the 6 bars or 12 bars, and that would be a fantastic swing. But I don't know. Right now we're stuck, so I'm going to utilize the upper and lower part of this trading range. Okay, everyone? So we'll see. Today closed as an inside day. Bulls probably want another leg up, and that's where I think we might get another leg up here. We shall see, but that we have to trap every other bear below that trend line and get a trap pattern and go up. So we shall see. Okay. All right. So I am done with my session. Hopefully you guys learned something today. And if not, I'll see you guys. I think I am off tomorrow, but let me check real quickly. Okay, oh, look at that. So I am solo tomorrow. So I'm going to see you guys tomorrow morning, and then and I'll see you guys in February. Okay, so it looks like it's me tomorrow. All right, you guys can get rid of me. All right. Okay, you guys all have a great day and great evening. Bye, everyone.